Welcome to the Daily Business and Finance Show. In today's episode, we delve into the financial world as CVS Health takes a hit due to medical cost trends and Saudi Arabia nears a defense treaty with the U.S. We'll also discuss Google's massive layoffs in core teams and job shifts to India and Mexico. Stay tuned for updates on Carvana's soaring stock after Q1 results, CVS Health hitting a 52-week low following Leerink downgrades, and how restaurant stocks are faring amidst Starbucks' warning on cautious consumer spending. Plus, we'll cover today's biggest stock movers, including CVS, AMD, Pens, SMCI, among others. Lastly, we will explore lawmakers' investigation into FTC interaction with EU over Amazon deal collapse. Don't go anywhere. Right after this short ad break, we'll dive deeper into these headlines. Shares of CVS Health took a hit following the announcement of their first quarter results for 2024, which fell short of expectations. This also led to a reduction in their full-year forecast, with the company attributing this to trends in medical costs. Despite witnessing a 4% increase in revenue, amounting to $88.4 billion, the health services segment of the company underperformed due to the loss of a significant client. On a brighter note, CVS Healthcare Benefits and Pharmacy and Consumer Wellness segments exceeded expectations. However, adjusted earnings per share saw a substantial decrease by 41% year-on-year to $1.31 as operating income declined by 32%. The company has also revised its adjusted EPS outlook for 2024 downwards due to anticipated ongoing pressure on medical utilization.
The United States and Saudi Arabia are on the brink of a groundbreaking pact, assuring safety for Saudi Arabia while enhancing diplomatic relations with Israel. This agreement has the potential to transform the geopolitical landscape of the Middle East, bolstering the role of the U.S. in opposition to Iran and China. The treaty necessitates Senate endorsement for providing sophisticated armaments to Saudi Arabia, in return for restricting Chinese technology in critical networks and substantial American investments.
Google is in the process of reducing its workforce by 200 members from its central teams, with certain positions being relocated to India and Mexico. This action comes on the heels of multiple layoff rounds that have occurred this year across different sectors. In spite of these reductions, Google's stock value has experienced a rise of 1.4%. As part of a restructuring plan, the company intends to cut approximately 12,000 jobs.
Carvana, an e-commerce platform specializing in used cars, experienced a 28% increase in its stock following the announcement of what has been termed as the best results in company history. The firm managed to turn around from a loss of $286 million to report a net income of $49 million in the first quarter. Additionally, there was a year-on-year revenue growth of 17.2%, amounting to $3.6 billion, which surpassed estimates by nearly $400 million. This positive trend is on the back of Carvana's first annual profit recorded in 2023, attributed to cost reduction measures and debt reduction agreements.
Shares of CVS Health have reached a yearly low following the first quarter results of 2024, which led to a downgrade by Leerink Partners. The downgrade was influenced by several factors, including the company's reduced outlook for the full year, increasing cost pressures in health insurance, and uncertainties surrounding Medicare Advantage. In addition to this, Leerink has also lowered CVS price target from $87 down to $60 per share.
Shares in restaurant companies, such as Semographics Cava Group, Sweetgreen, and Dutch Brothers experienced a downturn following an announcement from Starbucks. The coffee giant reported a significant decrease in their full-year guidance due to cautious consumer spending and a deteriorating economic forecast. This news led to Starbucks shares plunging almost 17%, reaching a new low for the past 52 weeks. Yum! Brands also disclosed an unusual drop in same-store sales, attributing it to challenging operating conditions. Other restaurant stocks similarly saw reductions.
Fluctuations were observed in stock futures as the market eagerly awaits the Federal Reserve's decision on interest rates. Pinterest shares experienced a significant surge, rising over 16% following Q1 earnings that exceeded market predictions. In addition, NIO shares saw an increase of 6%, spurred by an announcement of substantial delivery growth. On the other hand, CVS Health and Starbucks witnessed a decline in their share values by 18% and 12% respectively, attributed to less than satisfactory earnings reports. Despite promising revenue forecasts, advanced micro devices and super microcomputer also faced losses.
Members of Congress are investigating the involvement of the Federal Trade Commission in the unsuccessful sale of iRobot to Amazon, which was valued at $1.4 billion. They express concerns over possible damage to America's international reputation in the field of personal robotics. The FTC is facing allegations of collaborating with European Union antitrust authorities, a move that led Amazon to back out from the transaction due to expected rejection in Europe. Following these events, iRobot's stock value has experienced a significant drop by 68%.
That's it for today on the Daily Business and Finance Show. Stay informed, stay invested. Until next time, keep chasing those financial dreams. Goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. It's time for us to say goodbye until we see each other again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.